ousted co-CEO of Canopy Growth, buying up more shares of his own company after he was fired. Shares of the Canadian cannabis giant dipping last week after a bleak quarterly result. Joining us right now is the man himself on set, Bruce Linton, former co-CEO of Canopy Growth Corporation. The last time we talked to you was literally by phone the day, and we asked you what had happened. You just came out and said it. Because I was trying to play nice.
Yeah.
And you said, no, I was fired. That's what happened.
Terminated. It says terminated. You read the word, it says terminated. That means you're terminated.
And so what's it been like a month later, a month and a half later now?
Well, my advice I've been giving to a lot of people is you should get terminated as soon as you can, because you become immediately very popular. At least if you built a company that's market cap got to be $20 billion in 6 years. And so what it's been is a lot of companies want me to get involved because probably it would create short-term value, and I don't want to do that. I want to get involved because it'll at least create 2 to 3 years of value, and so I have to go around and find out who's the short-term story that you can actually turn into a medium-term great value build, and that's been harder than I expected. Okay,
so as you've been going around having those conversations, meanwhile, the company that ousted you, you've decided actually is better than you think people have given it credit for? Well, you now want to invest in these people?
Well, at $30 plus Canadian,
right?
If you look at how much cash is in the bank and the culture and the people that I brought together, there are almost 4,000 people there. They're in 16 countries. They have more intellectual property filed and protected than any other company. So when you see a little bit of a sale, and what's happened every year in August is marijuana stocks generally get cheap. And it's because they're high-volume stocks driven by retail trading. In August, a lot of those folks say, well, I'm going to take a vacation. They quit trading. Stock falls down. You buy it, and then in September, October, November, there's events that make them more valuable, things like elections, new products being allowed, new regulations rolling out. So I think by the end of the year, a lot of the good stocks will go up, and I think a lot of the weak ones are going to be dead because the cash is harder to get.
And is your sense, though, generally, I mean, a lot of people don't typically buy the stocks of companies that no longer want them there.
Well,
I mean, how much of that was a little bit of having to get over, I mean, I want to say get over your ego, but clearly you must have. The most people, I don't think, would have necessarily done that.
Well, you know, apparently if you get fired, what we should do is just slink away and hide under a rock. But I don't think that's the right thing to do. You know, it was the right time for them to make the change they want. It was the right time to buy the stock, because when I look at it, I go, I was one person. If I was that important to the company's not that key. But we have an awesome team there, and when it's cheap, you buy more.
Okay. Did you? Did you?
Yeah, I bought some more. It was, I think people misunderstood their quarter in that there's this big headline number. But when I look at stocks and I look at quarterly announcements, I really don't care about the non-cash affecting things where they write off some money because they let somebody have a longer time to pay, or their stock options cost money because non-cash because the value of the company goes up. I just look at the actual losses and where they spent their money, and it wasn't that big, and then what they spent it on was intellectual property and growth.
So when we were on the phone, I said to you, now that you were sort of free to speak, what were the other companies out there that you liked or that you thought were at least clever or interesting? Now that you've done this analysis, is there one or two out there at all that you say to yourself, okay, this makes sense? Or, by the way, you can even take the question the other way. And you could say, you know what, I thought this company was good, and I realized actually it's terrible.
So it's kind of like a long drum roll, right? I'm going to come back here in the third week of September, and I'm going to tell you folks what are the 3 or 4 companies I'm going to be active with. And the reason I'm doing it then is, well, there's going to be, I think, a lot more people watching in the third week of September than, say, like at...
We got huge ratings at 7:23 on August 20th.
Yeah, your mom, my mom, like everybody's mom's up this hour watching.
So this is just a little tease.
So what I will say
September.
is, so what I've learned is to get cash into cannabis companies right now is much harder than it was 6 months ago.
Why?
I just think a lot of them got a little too excited. They were a little too valued. People expected shorter-term results. Maybe the stories mixed them up where they weren't talking about how come it's going to take a while to build a great company, and now money's a bit afraid.
Well let me ask. I can think of a lot of companies where this has happened, maybe most recently an Uber or a Lyft, which, look, great companies, they're doing things, but they haven't turned a profit yet. They're still burning through cash. Long term, it may be a very good strategy, but that doesn't mean that the stocks didn't get overvalued along the way.
No, I think sometimes people commit to say, well, we're going to be profitable soon, when really they should be clear that what we're going to be is really profitable in a time frame of 2 or 3 years.
Look, I think Uber's been pretty clear about that. They don't expect to make a profit anytime.
But I would say in the tech space, and I'll put Uber there, people have been more consistent in that vocabulary. I would say in the marijuana space, a lot of the folks have been a little bit too eager to please investors and promise what they couldn't deliver.
But would you say that these stocks or valuations for the companies that are private are overvalued or bubbled at this point?
I would say the privates, some of them got overvalued and they can't get public because they'd be down rounding on a public. Right. And I think that's just a function of them using a chart that says, if I were public, this is how much I'd be worth. Mm-hmm. And they take all of the gain out of the stock in the private mode. But I think people expect news every week in the marijuana space. They want to hear what's Mr. Trump going to do. They want to hear what's happening in Europe. How's it going in Canada? And there isn't news every week. There isn't something that you can turn to and say, well, look at Germany just changed the regulations. No, that happens once a year.
Okay. Well, Bruce, thank you for coming in now. Your mother thanks you. My mother thanks you. And all of our other viewers thank you. But we will see you again, it sounds like, in September with a big announcement. How about that for a tease? Like a month. That's like a drum roll. Every day for the next month, we're going to be rolling that drum.
Excellent.
Okay, appreciate it. Great to see you.